Arthur Andersen was a holding company that located in Chicago that was established by Arthur Edward Andersen and Clarence Delaney. Okay, the type of Arthur Andersen Company is limited liability partnership that main focus in accounting and tax consulting. In 1913, Arthur and Edward Andersen decided to start his own accounting company along with the Clarence Delaney as Andersen. The accounting company named Andersen, Delaney and Co. Andersen, Delaney and Co. changed its name to the Arthur Andersen and Co. after Delaney left the company in 1918. Arthur Andersen and Co. become increasingly interested in provision of facility for consulting starting from 1970. The company continually grows and become the largest consulting company in the world. In 1990s, the company started to increase to the worldwide that known as a Big Five accounting firm along with the PricewaterhouseCoopers, Deloitte Touches, Tomatsu, Ernst and Young and also KPMG.
One of the issues which caused fall of Andersen is financial improprieties. Andersen either intentionally ignored the errors in the audits or did not do his job as an auditor's company, which shown by clients who collapsed. One of his clients' waste management audit report were deceptive and false, which caused inflation then sold to another corporation. Another client, Sunbeam, was found by SEC for using trade to raise fake sales and profit, but Andersen approved a clean or unqualified view although aware about their financial statement. The cause was Andersen may neglect its legal obligation to publish shareholder in favor of defending the interests of its clients such as Enron, where it earned $1 million a week in auditing and consultancy. Their relationship in legal and ethical terms violated significant aspect of theory of accounting principle. Andersen has violated many kind of element control create a framework through which the company depended on money and the essential was a positive figure on client's balance sheet. The implications to Andersen was stop and desist order by SEC concerning any security breach and had to pay a penalty of $7 million for waste management case. Lots of clients dropped the firm as their auditor as public corporations sent their process statement including the approval of auditor to shareholder. Because of the controversy of financial improprieties with Enron, many clients already hired other auditor to double check all the work by Andersen before. They ended its role as auditor and was banned from auditing companies. Step taken by Andersen after this issue became too big is by voluntarily gave out his license and already been done by over 700 firms and told SEC afterward it would cease from auditing public companies. Andersen can overcome this issue from happening again by following safety measures. GAAP is a common protocol used by accountants and a complex collection of broad and precise guidelines for companies to follow for financial statements. If the organization does not meet GAAP, they must explain why and prove what they did is ethical and acceptable. Next is by separating accounting features. Separation of duty is for an efficient internal control structure. When accounting service is separated, the possibility for one to commit improprieties can be reduced.
The second issue is lack of integrity in the organization. The main issue is Arthur Andersen's lack of integrity of financial presentation and disclosure of level of social engagement. The company used to be chosen by consortium of East Coast banks for its trustworthy reputation. However, Arthur Andersen was involved in several failure cases that leads to the lowest income and affect their reputation. Next, the employees were praised for money they brought into the business and for behaving with integrity. For example, the company destroyed thousands of documents of Enron for the sake of profits. Next, the causes of the integrities issue attributable from the divisions within a corporation. The main reason they break the law is trying to achieve what they want, especially in the form of monetary, even though it violates the laws. Then, some employees of Arthur Andersen may adopt more liberal view, so they tend to break the law. Also, the clients offered give hired auditors more lucrative and well-paid jobs. With that, they focus on getting more clients to get more profits. Thirdly, the implications on the company is they have to bear a large part of the blame when they fail to put integrity values at the first point. Moreover, it leads to the loss of 28,000 jobs at Arthur Andersen and affect in innocent employees' lives. The client also will put a less trust towards the company's credibility, and hence Arthur Andersen's reputation was severely affected. Then, the step that taken by Arthur is firstly, the company voluntarily surrendered its license after it was found guilty of a fraud. Then, Andersen employed former chairman of the Federal Reserve Board, which is Paul Volcker, to help restore his reputation back. Andersen also had fired 7,000 staff to reduce costs after a wave of client defections. Lastly, the ways that could prevent the issue from happening again is by setting things right. The initiative including improving the consistency of corporate financial statements transparency. Thus, the business report must be reliable and in-depth details to determine the valuation of the firms. Also, they have to hire more qualities employees. The appropriate training and action also should be taken to the employees that break the laws. Lastly, they have to avoid the appearance of wrong and be honest. Good reputation will bring the quality of success of a company.
The next issue is the poor management by the organization. Firstly, the main issue is about the poor management by the organization. As we know that Arthur Andersen not only provide auditing services but also providing the consulting services to the clients. The Arthur Andersen is very essential in the beginning of the operation, but several years the audit was no longer seen as necessary by the client. So they create the consulting services to increase their revenue. However, it caused a problem when the manager only focused on making profit on the consulting side, resulting in unfair management in both services. Secondly, what caused the poor management by the organization is when the consulting services began to increase and generate more while the auditing services tend to decrease. Other than that, their leader named Dolin Colbert only focused on giving more operating control to the consulting rather than the auditing side. Next, the auditor get the higher pay scale than the consultant, while the consulting give more revenue than the auditing. Also, the Arthur Andersen allowing the accounting partners to manage the consulting business. Thus, it could be seen that the manager were biased and unfair toward their workers. The implication on this issue is they had to be separated into two different business units who act under an umbrella organization, and all the finance was separate track and moved in a very different direction. Because of that issue, they decided to restructure again by dividing into two entities which has audit and tax known as Arthur Andersen & Co. and the consultancy firm known as Andersen Consulting. Furthermore, the step taken by Andersen is they changing the certain part of their organization, which is Arthur Andersen began requiring the partners to retire at the age of 50 years old. Moreover, they added a new policy to the less experienced auditor in order to avoid the same problem from happening again. Lastly, Andersen can overcome the issue from happening again by providing the training to all the managers and not only the employees. This is because the lack of training lead to the business failure. Next, manager also need to create positive environment in the organization. For example, should not remove the employee without the reasonable reason. Lastly, manager also should lead the company with fairness and not only focusing on one department only.
Next, lack of ethical and corporate culture. Arthur Andersen was more interested in his rise in revenue than in the profit generated, or in whether his integrity as an auditor had been jeopardized. One of the reasons is the organizational culture may have been descending to custodians who were essentially unaware of the business politics of multiple amateur advisors and untrained auditors. Arthur Andersen still has no control over the audit departments, and this exposure has suffered because of a relative absence of inspection and balance. The cause of this issue is Arthur Andersen has limited supervision over his audit team and found to be impaired due to a relative lack of monitoring and stabilities, which could have been known when audit teams were stripped of adequate policies. In terms of financial question and restatement, audit committees have a great deal of discretion. Arthur Andersen's business culture also tends to be an issue. Workers will compensate instead of behaving with dignity for money they bring into the business. The implication of the issue toward the company is Arthur Andersen was sentenced to obstruction of justice, among other sanctions, and he was fined $500,000. By the end of August 2002, he decided to cease auditing public corporation, and the word Andersen is not found anywhere on Accenture's website. It gives a negative impact on all his workers, even though some of them are not involved in accounting fraud. Andersen recruited Paul Volcker, former chairman of the Federal Reserve Board, to institute restructuring and regain his legacy in February 2002. However, soon after Volcker entered, Andersen was charged with obstruction legislation concerning the shredding of Enron's paper during the inquiries. The issue can be avoided by the implementation of ideas, vision and mission, and fundamental values. The company needs to clearly state its main purpose of establishing their company. Next, the company needs to provide training programs on morality in which staff react to theoretical circumstances that may occur in the company. Lastly, infringement of standard of business conduct by the Commission and Human Resource Procedure, where workers are disciplined accordingly on the grounds of the crime against the corporation. This should be applied to both partners and clients.
Shareholders and stakeholders conflict. Andersen's conflict of interest and audit execution failures harm shareholders and stakeholders who relied on Andersen's clean audit opinion of Enron. In 1989, the consulting operation wanting more control and a larger share of profit became a separate part of a Swiss partnership from the audit. The generation of revenue became more and more desirable and the key to merit and promotion decisions. The retention of audit clients took on an increasingly greater significance as part of this program, and since clients were so large, auditors tended to become identified with them. Arthur Andersen apparently approved as auditors and consultants as many special purpose entities SPE that were used to generate false profit, hide losses, keep financing off, Andersen's consolidated financial statement, and failed to meet the required outside the 3% equity at risk and decision control criteria for non-consolidation. He also failed to recognize the generally accepted accounting principle GAAP that prohibits the recording of shares issued as an increase in shareholders' equity. The worst, Arthur Andersen did not advise the Andersen Audit Committee that Andersen's policies and internal control were not adequate to protect the shareholders' interests. The implication is, on January 10, 2002, Arthur Andersen admitted that the stock prices of most of Arthur Andersen's 284 other large clients that were part of the Standard & Poor 1500 index fell. What did the Andersen do about it is Arthur Andersen to have been so interested in revenue generation that they were willing not to take a hard line with their clients. Arthur Andersen personally apparently believed that there was no serious risk of default and that, over time, accounting problems could be worked out. At the very least, his risk assessment process was seriously flawed. How to avoid the issue from happening again is, as an independent auditor, Andersen oversaw business transaction and bookkeeping and verify the profit that each company posted so that potential investors could base their investment decision on credible information.
Conclusion, Arthur Andersen's case served as a daily reminder to regulators and accounting firms. It is because any companies, they have to stick to their company's motto, which values the importance of corporate governance, accountability, and a strong corporate culture in the accounting industry. Ethical wrongdoing allows the public to lose. Meanwhile, making big profits ahead of ethics and law is a major offense. The first lesson that can be learned in the case study of Arthur Andersen is that the major changes in the accounting procedures used by the companies required. Next, the conflicts of interest are incredibly dangerous crutch in the accounting. For example, the fall of Enron was practically inevitable. Lastly, the corporate ethical decisions need to be more closely monitored. Due to the fall of Arthur Andersen, people will pay more attention to how companies work, even though it will not personally regulate the ethics of the business. At least, there would be a great deal of incentive in this situation to do what is right. That's all from us. Thank you.